Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Daryl Thomas, and today we have the pleasure of sitting with Justin Huhn of the Uranium Insider. What's going on, Justin?
Good to see you again, Daryl. Yeah, there's a lot going on. There shouldn't be. It's the summertime. We're supposed to all be on vacation, but there's a lot moving and shaking in this market right now, which is very, very interesting.
Yeah, for sure. So there was some recent news that came out about Korea, and it had something to do with the term market and the supply of uranium pounds. And so, just want to get your pulse on that news that just came out.
Sure. Yeah, so we're recording this Friday. It was 2 days ago. Korea Hydro Nuclear Power, the large nuclear utility in South Korea, issued a public tender for 8.8 million pounds of uranium delivered over a period of 10 years starting in 2027. And this is a pretty large tender. It's not historically gigantic, but it's one of the larger ones that we've seen, by far the largest we've seen all year. Year to date, we've only seen 30 million pounds procured or secured, I should say, in the long-term contracting market, which is a fraction of what is that? 25% of replacement rate. It's a very, very slow year so far in the term contracting market. But the Koreans do something very interesting when they issue their public tenders. So typically, an RFP will come out from a nuclear utility that will say, we want this many pounds delivered over this period of time. Give us your offers.
Hmm.
And what the Koreans do is they say, we want this many pounds delivered over this period of time. Here are our terms. And while they allow for some flexibility in the offers or the responses to this tender, what they dictated 2027 to 2036 delivery, 880,000 pounds per year, up to, that's the maximum. They'll take a smaller amount, but that's ideally what they would like to procure, is 70% reference to the market at the time of delivery, which is a 6-month average of the spot price before that delivery time frame. So 70% market reference, floors maximum of $65 a pound, ceilings maximum of $101 a pound, with 30% fixed. Now, it didn't look like they put a ceiling price on what they would expect for the fixed portion of the contract. So potentially the fixed portion of the contract could be negotiated significantly higher, but that's not typically how it works. Usually the fixed portion of the contract is somewhere very close to the published fixed price of uranium, or the published long-term price of uranium. So if you're going to sign a fixed price base escalated contract right now, it's going to be somewhere in the 80s. So for them to do 80s-ish fixed, and then for 30% of the contract, 70% market reference, that's just not going to work with fixed in the 80s and floors maxing at 65. So to give you some frame of reference, what Cameco has been saying for the last year in their conference calls really is that what we are signing and what we are willing to sign in this environment right now is mostly, if not entirely, reference to the market contracts that are floors in the 70s and ceilings into the 120s or 130s. And that's Cameco. They are the biggest 100% publicly traded uranium producer on the planet, right? So there's other, state-owned, Orano, Uranium One, Kazatomprom majority state-owned, but Cameco is kind of the elephant in the room.
Really
And
quick.
this is,
Just to make sure I'm picking up what you're putting down.
yeah,
For the audience that may not be as sophisticated in this sector, RFP means a request for proposal, and
right.
so Korea is saying, hey, they want proposals for um, what they need is 8.8 million pounds over what is it, like a 10-year period.
Yep.
And so their floor is $65, which means that even if uranium fell to 50, whoever gets the contract would be able to sell it at 65, but then they cap it at 101. So if we're looking at the supply demand gap and all of the other bullish dynamics around uranium, that cap is going to restrict whoever receives this contract from being able to sell it at a higher price. And you're saying that Cameco has a ceiling of in the 120s.
Yes, that's what they've told the market, is that the what they want and what they have signed, at least in the recent past, is ceilings, market reference contracts with ceilings 120s, 130s.
120s, 130s.
Yeah. So yeah, you're absolutely right. The floors protect the producer, the ceilings protect the utility, essentially. So if the price shoots to $200, they will only pay a maximum of $101, assuming that this contract were filled at those terms. But the interesting thing is that the floor price that they're saying that they want to maximum 65 is below the market currently. And you've got the last delivery 11 years from today. So that's an enormous amount of time, a lot of uncertainty, obviously, to go that far out into the future. So for a producer, especially like Cameco, right? So they're signing 70s, 130s, let's say, market reference. Their cost of production is probably in the high 40s per pound, maybe even low 50s. We go 11 years out, the cost of their production, and there aren't escalators, by the way, in these floors and ceilings. So as with a fixed price, you'll typically have an escalator that's based around current interest rates or expected inflation rates, right? There's no escalators in these. So 65 is 65, 11 years from now. Take into account average inflation, and by the time you're delivering those pounds, if the market were to have collapsed and Cameco was delivering on that contract, they would be potentially delivering those pounds at a lower price than what their production cost would be. And Cameco, by the way, while they have reasonably low production costs, they also have a large mine, Cigar Lake, that is set to come offline before the end of this contract term. And so they are going to need and want to have something else in the pipeline at that point. What that is, we don't know, but likely they're going to have to continue to build and develop mines to keep the production in the pipeline as these legacy large mines come offline. So all of that is to say, this contract appears to the industry, at least to us and the people that we've communicated with in the last couple of days concerning the metrics, the terms in this contract, to be largely in the dark as to what the actual terms are in the industry right now. We don't think this is going to get filled on their terms. And to give you a little bit of historical context really quickly, this is unique how the Koreans do this. Nobody else does it like this. Most of the contracts in the term market are negotiated off market. The RFPs typically come out to kind of test the market. So right now we have multiple RFPs that are smaller from large US utilities that to us seems like these large US utilities are sort of testing the market. They're testing the depth, they're testing the price range and what they're going to come back, who's going to come back, and what sort of price offers will they have for those RFPs. But the Koreans, they did something similar in 2023, and they do this almost every year. Mid Q3, usually it's September, they come in with a tender. They did this in 2023, similar type of terms, right? It was lower back then, but similar as far as how it was relative to the market pricing at the time. And they went no bid. It was 50% market, 50% fixed. They had their terms. Nobody offered them pounds. Nobody came to the rescue on that. That contract went no bid. What we heard was that they eventually did sign a U308 contract, but not until the first half of 2024. They did it off market. They pulled that tender because nobody responded to it. And we think the same thing is going to happen here. These terms are completely not aligned with where the market is right now. And so what this means really to the uranium investor is two things. One, they came out with this tender earlier than they usually do. Two, they didn't sign any contracts besides potentially that smaller one that was following the no bid tender last year for uranium. They procured more conversion and enrichment. They have more uranium buying to do on top of this current tender. Three, if this goes no bid, it's going to be another obvious signal to the market, other utilities, other fuel buyers that are going to see, oh, the Koreans are coming here in size. These are the terms they want. Nobody is showing up to give them those terms. Okay, now I know what I have to do, which is you got to give Cameco what they want, essentially. And this tender back in 2023, the similar tender in 2023, was one of a few elements that largely, in our estimation, led to the price move that we saw Q3, Q4 23 into January, February 24. So we believe this is setting us up for a very, very strong seasonal period. We have a lot of term market activity right now for the time of the year. Have we seen a more active term market? Yes, we have, but it's been dead this year. And now things are starting to move and shake in the term market, which is anomalous for August. Usually this is not happening right now at this time of the year. So we think that's a tell.
Mhm. Got it. Okay. So just for context, so this type of RFP requesting over 8 million pounds, um, obviously Cameco could fulfill that request. How many other? I mean, I'm sure Kazatomprom. How many other like miners could and producers could actually fulfill this type of contract?
So for almost £1 million per year, the players that would be willing to fill that would probably be Cameco, Orano, they potentially willing. Cameco, Orano, Uranium One, Kazatomprom, Paladin. That's probably it. Maybe there's a trader with a sufficient offtake, but probably not. Maybe BHP, but BHP usually doesn't go out that far. BHP usually sells into spot or they sell shorter and mid-term spot referenced contracts. So, you can count on one hand who might respond to this or who potentially could fulfill even demand of this size. And this, historically speaking, Daryl, is not a huge contract. Like we're going to see some contracts that are going to be signed. We're going to see some RFPs out there for 2, 3 million pounds a year, potentially even more for long periods of time. And that's what we think is coming.
Yeah, yeah. Okay, thank you for that context. And so, could this be a trendsetter for any other utility companies within the market? I mean, it sounds like they're trying to come in and negotiate, and try to make the negotiation seem appealing, but then also cap their costs. Do you see other utilities attempting to do something like this?
Yeah, I think probably not exactly like this. I think more than a trendsetter, it'll probably be a wake-up call. And what essentially we're going to have to see, and what we're going to see is nuclear fuel buyers and nuclear fuel buyer managers are going to recognize that despite the fact that barely any volume has been traded this year, we're still at stagnant $80, $82 a pound in the long-term price. And the utility activity stepping largely out of the market in the term market for the last 12 to 14 months hasn't resulted in a collapse of the price. So basically, what that means is that they're going to have to approve within the budgets of the utility to procure uranium at the price that the market is demanding. And that's kind of the next step. And for the Koreans to come out with this tender, assuming it goes no bid, or if they negotiate it off market at a higher price and that gets out into the ethers, then you're going to see an example. And anytime there's an actual example in the market of a large contract being signed by the players that the utilities want to engage with at a price that they have yet to accept, it's going to be a reference point for them to move forward. And that's probably the most important element of this tender.
Hmm. Okay, got it. Okay, and then so obviously this has to do with the term price, and then we have spot price. So what are you seeing on the spot price front for uranium?
Spot price right now, let's see, 72 just traded going for September for front month, 100,000 pounds. So that's where we're at in the spot market. It's about $8 below term. It's right kind of on the cusp of carry trades getting done. So you can do probably some smaller volume carry trades if the utility is willing to pay, let's say mid 80s for 2, 3, 4 years out. You can buy in spot and probably have enough profit margin for a trader. But the carry trade is what is keeping a floor in spot, basically meaning there's sufficient utility demand in the midterm that when the price does get down to 70, 71, you see action there. You see the traders buy up that uranium. And so that's where the spot price is at. The floor we think is in for spot. I mean, the only thing that I think would cause a washout here in spot would be some kind of market crash, broader market crash, speaking equities going extremely risk off. I don't know if that's going to happen. I'm not expecting that to happen. The S&P just continues to climb a wall of worry. Could something pull the rug out of the market? Sure. Are we going to see the spot price crash below the price that it was late March or late April? No. No. We'll see a higher low if it goes lower from here, but I don't think it will, Daryl, because we're so close not only to the WNA conference in a few weeks, but just the seasonal strong period, utilities getting new budgets, utilities showing up at this conference, talking with producers and getting a feeling on where the market is at. Then they get budget approvals and they come into the market, they buy what they need to buy. So I think we're on the cusp of that, which is why I don't think the spot price is going to fall here. I think spot is an unbelievable risk reward opportunity right now. And yeah, it's going higher. I don't think it's going to go much lower, if at all. Higher is where it's going to go. I can't tell you if it's going to happen tomorrow, next week, or next month, but it's going to happen soon.
We've got 3 of the best porphyry copper targets that I've seen in the past 25 years of exploring for porphyries. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. We've put our foot on 2 outstanding projects in central British Columbia with copper and gold and some molybdenum in there. Our Poplar South project, we're drilling there at the moment, and I think we're on the verge of a major discovery. If you want to learn more, you can find us at vizslacopper.com.
So I want to transition to the actual equities. We had Liberation Day, equities sold off significantly. I went in buying. I'm sure you probably went in buying too.
Very aggressive.
I don't feel like I was aggressive enough, but I've been able to lower my average cost and take some profits as well. So we got this kind of disconnect. So we have the bigs. Cameco has been ripping, continuously ripping.
Yeah.
Then we got nuclear stocks continuously ripping. Stocks like Oklo, some of the other ones, SMR and some other, the nuclear ETF that's been ripping too. So we got quite a few nuclear stocks ripping. You got Centrus Energy ripping. You and I talked about that. I took a short trade on that. I sold a little too early, but I profited at the end of the day. So I'm trying to just move on from that, from that trade.
Nobody ever went broke taking profits.
Yeah. And then, but when you look at like SPUT, for example, I mean, SPUT's still pretty cheap compared to I think a couple of years ago it was trading at like 35, 36 Canadian, something around that range. And now it's trading at 22 Canadian. I think its low was about 17 or 18 Canadian, somewhere around that range. You got URNM, URA, and URNJ, all ETFs of basket of miners. These are not performing well at all. I mean, they're performing okay, but URNJ is definitely not not making much noise at all. So what do you make of this kind of disconnect in the performance of these equities? Is this institutions buying the bigs and buying the most brilliant names? What is retail doing? What's your assessment of this?
So there's a lot of nuance to all of this, but what I can say, okay, let's just get into it. Cameco is an across the board stock. It's a one-stop shop for exposure to uranium and nuclear. So they essentially have vertical integration across the fuel cycle. They are uranium miners. They have conversion at Port Hope and potentially at Springfields again in the UK through Westinghouse. They have exposure to enrichment, not yet, but they will, with their ownership of GLE, their partial ownership of GLE. In our estimation, they're highly likely to increase that ownership as they are allowed to do to 70%, probably after they secured DOE funding. Then they have fuel fabrication through Westinghouse, and they have the actual reactor buildouts through Westinghouse. It's a one-stop shop. And it's an institutional darling, and it's been the vast outperformer. It also is the largest element to explain the outperformance of URA, because URA, 24% of URA is Cameco.
Yep.
And that conversely explains the underperformance of URNJ, which intentionally does not hold Cameco. It's focused on the smaller cap miners, so it doesn't hold Cameco or Kazatomprom or SPUT. So that's why it's underperformed. And it's important to keep in mind, uranium is actually down year to date. So the spot price of uranium is down year to date. And there's a handful of uranium miners that are pure play miners that are up significantly this year, even with the spot price slightly down. The uranium equities are going to move, to speak very generally, with the price of the commodity. And so it's not lockstep, and there's plenty of historical evidence of the miners moving when the price is flat, moving up or down without the uranium price actually moving or moving opposite the price. It happens, but on a long enough time frame, generally speaking, and it makes sense that they would, the miners move with the metal. So in our estimation, the contrarian bet here is on the uranium miners, because when the price moves, the money's going to come in there. As far as the nuclear stocks, there's been a lot of nuclear headlines that have nothing to do with the price of the commodity that have been moving those stocks, but also the SMR names that you mentioned, the nuclear builder names that you mentioned, have just become memes. Centrist, these have become meme stocks. These are not institutional darlings. These are, go ahead and look up the ticker on X and see what you find for those three stocks. All it's going to be is Wall Street bets types pumping and technicals. So it's, and to your point, you said you sold too early on Centrus. It's hard to know how long to hold a stock that it was overvalued 50% below where it is now. So they basically become memes and have outperformed for that reason. Cameco has outperformed because it's Cameco. It's the one-stop shop nuclear and uranium mining stock, and it deserves to be, in my estimation, the industry bellwether. So Spot also trading at a slight discount here, but the spot price hasn't really moved yet. And when it does, it's going to move very, very hard. And that is what we think is coming next. That's why we think it's a strong bet here on the uranium miners. Will we see money rotate out of the nuclear stocks into uranium? That's possible. But you know, the nuclear story is also very, very strong here, regardless of what uranium is doing. And yes, they are linked, but they're linked on a long time frame. All of the positive nuclear stuff that has happened in the last 2 years, it de-risks the fleet. It will incentivize the growth of new nuclear builds, but the pull on the actual fuel takes some time. And that's it's like the tail of the whip. Takes a while for it to hit, but when it does, it just really hits. And that's what we have in front of us.
Got it. Okay, thank you for breaking that down. That's very helpful to understand. I don't think we've spoke since the executive order was signed regarding nuclear energy, and particularly in the United States. What's happening on that front? So obviously, enrichment, a lot of enrichment was coming from Russia, enriched uranium. And then now there's efforts being made to kind of onshore some of that, or find new partners to trade with regarding enriched uranium. And then what does it look like for infrastructure for the U.S.? I think I saw an article recently where New York is trying to put together a power plant. So I'm like, okay, is that something that's new, and should we be surprised? Is that more of a sentiment change, or what's your take there?
Well, New York, considering building new nuclear, is definitely a sentiment change, because they just shut down Indian Point a few years ago, which was a perfectly functional reactor kind of just north of New York City. So yeah, there's definitely been a sentiment change. There's certainly a lot of support from the federal government currently. There's been a lot of reforms at the NRC, some for better or for worse. It's certainly looking like timelines are accelerating at the NRC, but there's a little bit of concern there that the reforms that are happening at the NRC could potentially lead to NGOs and certain other environmental advocate nonprofits throwing sand in the gears more easily to building new nuclear. So that remains to be seen. But what we're seeing right now is the head of the Department of Energy, Christopher Wright. He's just absolutely banging the table on building nuclear. I mean, he posted a few days ago that growing nuclear in the United States is his #1 priority. This is the Secretary of Energy for the country. So it looks very, very positive. We know that the Trump administration and the Department of Energy are very focused on expanding electricity production in the country as quickly as possible, and doing so with baseload power. So they're expanding gas. They're keeping some coal plants even online longer than they were supposed to be, expanding gas and expanding nuclear. And new builds are coming in this country. They have not been officially announced yet, and they will be. So that's what's coming. I don't know if that's happening this year, but it's probably going to happen very, very soon. As far as the states getting interested, It's a recognition of a supportive administration, but at the same time, it's also just states wanting to attract industry and making sure that they have a sufficient grid to support their own local state economies and the growth of the electricity demand in those states. So we've seen Texas looking at building a huge data center campus and powering that at least partially with nuclear. We saw just yesterday, the day before, that the Denver International Airport is looking at building an SMR to power the airport. You mentioned New York State looking at building new advanced reactors. I mean, the list goes on. There's dozens. There's probably a couple dozen states that are looking into building new nuclear, whether that's a large AP1000 or a small modular reactor. It's expanding very quickly as far as the interest in building new nuclear here in the States. Yeah.
Yeah. And that's one thing I can appreciate about President Trump is, the reduction of the red tape around this particular commodity and form of energy, because we do need a base load clean energy. I mean, and this is the answer, right? And so just him coming in and being supportive of that, obviously the director of the Department of Energy being supportive of that, like, I can appreciate that. I have my criticism about him, but I want to be objective as possible, and that's something that I really appreciate.
Sure.
So thinking about so we have things happening in the U.S. where infrastructure is being built and production and around enrichment and such. Where do you see things going from here? I mean, obviously, we still have the supply demand gap. And I think you and I did like a deep dive on on an interview on my channel. And we talked about Kazatomprom not being able to keep up with the amount of demand that's going to be coming. We have the AI data centers that are still talked about in a lot of headlines around. I think Google recently invested some money into the grids, looking to invest billions into the grids, which, I mean, a lot of this have to do with updating the grids and ensuring that we can even live in this more energy intensive world. And so what's your overall outlook as far as like the supply demand and with all these different factors at play?
My overall outlook is that the supply and demand picture still looks concerning on the supply side. The market right now, we've gone from over the previous decade until maybe the last couple of years, and obviously going forward, the previous decade, I mean, to be completely honest, the previous decades have been driven by oversupply. We've had an oversupply of uranium, and we've had enormous amounts of secondary supply that have enabled utilities to procure uranium relatively easily, relatively cheaply, with very few exceptions. One of those was a 2-year period, 05 to 07, where the price went on a moonshot, and that was largely driven by financials. We had actually an oversupplied or a sufficiently supplied market at the time. It was just a financially driven speculative move. And at the time also, we had all commodities going absolutely crazy right before the GFC crash. But we had, megatons to megawatts, 20 million pounds a year for 20 years from 93 to 2013, secondary supply from Russian downblending. That ended, 12 years ago. Secondary supply from underfeeding has significantly dropped off. This is an overabundance or a lack of demand for enrichment, and the enrichers can spin very low tails and supply into the market. They can underfeed the market, and that was, almost 30 million pounds going back 5-6 years, and right now it's maybe 10, between 10 and 15 million pounds. That's been chopped in half. So secondary supplies are insufficient. There is no longer a large overhang of above ground mobile inventory from the oversupply of the previous decade, especially after Fukushima. Kazakhstan kept producing more and more and more every year. Demand was coming down at the same time. Major oversupplied market. The inventory overhang isn't there anymore. So right now, and as far out as you look into the future, the demands of the industry are going to have to rely on production to fulfill their needs. So no longer are you going to see traders working through inventories. You're not going to see governments down blending and selling material because those stockpiles aren't there anymore. It's going to have to come out of the ground. And some of it is going to come out of the ground, okay? We're seeing projects come online. We're seeing the industry move towards increases of production because Kazatomprom is going to be able to increase production by a few million pounds a year, as far as we can tell. Are they going to be able to hit 80 million pounds a year? Highly, highly unlikely. They also have projects in decline, and so they're going to need to have to establish new projects at the same time just to maintain nameplate. We're seeing smaller stuff get developed in the United States. We'll get to a few million pounds a year in the next couple of years. Big projects like NextGen's Arrow, that's really a kind of a linchpin. And will they be able to develop that and do it fast enough to supply the market and maybe get close to balancing the supply and demand for a point in time before it again blows out? And that's the big question, right? So any more delays in that project are going to lead to somewhat of shocks to the industry and responses in the price of uranium. So if I had to sum it up, what I would say is that the nuclear story continues to grow. It's very, very positive. It continues to de-risk the existing fleet of nuclear plants globally. Yes, we're still going to see shutdowns, but they're going to slow down. We're going to see a lot more life extensions than we expected. And the supply side is relatively easy to model out because there's only a few dozen projects that are producing, and there's only a couple of dozen that could even get developed. And you can see those very easily on a spreadsheet and move them around, and what you come up with is a pretty stark picture of what we're seeing here on the supply side relative to the incredible robust demand growth. And then the AI data center story is mainly a de-risking event. It's the demand for electricity is going to be so strong that prices are going to rise. That's good for the utilities. That aids the utilities in making that final decision to pay up for uranium, the prices that the producers are demanding that they're not really all that happy about right now. They're going to have to, they're not going to have an option. So the growth of electricity is just a very, very good for the nuclear story. And as nuclear continues to grow, it's incredibly positive for the fuel. And the fuel is really that, like the tail of the whip. This is going to continue to move, generally speaking, up and to the right. We'll have plenty of periods of volatility, but the price is going to keep going higher, period.
Got it. Yeah, that's super bullish. Mergers and acquisitions. We had Paladin acquire Fission, and typically I've been kind of keeping an eye on that. Like, okay, is this a sign of more revenue and more bullish sentiment and such? And so that's the only acquisition that I'm aware of. Do you foresee more mergers and acquisitions down the line?
Definitely. Yeah, I think that the sector needs to consolidate here. And the primary reason for that is that there's only so many skilled operators. There's only so many people that know how to build mines, and we're going to need to see more mine development in order to actually have an industry. We're going to have to see the uranium producers of the world produce more than 200 million pounds a year. And right now we're at 165 million with negligible secondary supply and insufficient inventory to buffer any shocks. And so, yes, I think we're going to see some M&A. I think that we need to see some M&A. I think there should be some larger acquisitions for these larger projects, knock on wood. But with all of that said, the fact that the industry is relying on production kind of for the first time in modern history, we don't need to know what the shock will be to the industry. All we need to know is that the conditions are there for something to disrupt it. And the conditions are there. There will be disruptions to supply. And because of the reliance on new supply that the industry has now and the lack of an inventory buffer or a secondary supply buffer, anytime we have any sort of disruption on the supply side, it's going to reverberate throughout the industry and throughout the sector. So that's what we're expecting. As far as M&A goes, like I said, you can count on both hands the number of people probably globally that are super, super skilled at building complex mines, especially for uranium. And so, yes, I would like to see more consolidation. And I think that we will as things get more and more serious on the mine development front, and companies actually have to take their project and do something with it. And that's slowly happening.
Got it. Yeah, thanks for sharing that. So, Justin, appreciate you coming on the show and everything. Anything else you want to share with the audience before we wrap up?
Hey, that's my pleasure. No, I would just say keep your eye on the physical market. There's the clues are there. And the fact that we're seeing a fair amount of activity in the term market in August is a very big tell for us. So we're excited about what's coming in the very near future.
Yes, agreed. And so everyone, be sure to go check out uraniuminsider.com. Also, subscribe to the channel if you have not yet, as we will be continuously putting out more content. And we'd love to have your support at VRIC Media. I'm your host, Daryl Thomas. Thank you, Justin, for joining us today.
Always a pleasure, Daryl. Thanks for having me on.